So, you've probably heard the name Groww, right? In just a handful of years, this digital investment platform has absolutely taken over, completely changing how millions of people in India think about the stock market. Today, we're going to pull back the curtain on this fintech giant. We'll look at the engine behind its crazy success, what its growth really means for investors, and of course, what the future might hold. Let's dig in. Okay, to really get a sense of the scale we're talking about, let's just start with a number that'll kind of blow your mind. Grow's estimated valuation for its upcoming IPO is a massive 61,736 crore rupees. That's about 7 billion US dollars. You see, this isn't just another tech startup. It's a financial powerhouse, playing in the big leagues with some of India's most established banks and institutions. And look, that huge valuation isn't just smoke and mirrors. It's built on pure market dominance. Right now, Groww has 26.6%. That's more than a quarter of all active trading clients on India's national stock exchange. That puts them at the top of the mountain. They are, without a doubt, the biggest retail broker in the country. So the big question is, how on earth did they do it? And more importantly, how does this thing actually make money? All right, let's pop the hood and see what makes this engine run. How does a massive operation like this actually bring in the cash? Well, the model itself is pretty straightforward, but the way they've executed it, that's been incredibly effective. At its heart, Grow's basically a one-stop shop for any retail investor. They started out just with mutual funds, but man, they expanded fast. Today, if you want to trade stocks, get into derivatives, or even get a loan using your stocks as collateral, you can do all of it right inside their app. The whole thing is designed to be super simple, easy to use, and all digital. And this chart here gives you a really clear picture of where the money comes from. For the 2025 financial year, look at that. A whopping 85.5% of their income came from fees and commissions. That's mostly the small fees they charge when people trade. The other slice, about 14.5%, is interest income. Think of things like their margin trading facility, where they let you borrow money to trade. So the takeaway is simple. The more people are trading on the platform, the more revenue Groww brings in. You know, Grow's strategy here is pretty smart. They're trying to capture the whole spectrum of Indian investors. They're really focused on two different groups. First, you've got the aspirational users. These are your everyday investors, often new to the market, and they make up the huge majority of Grow's user base. But, and this is super important, they're also attracting affluent users. These are the high net worth clients who bring in much bigger portfolios. This dual focus is just key to their whole plan. It gives them massive scale, but also lets them reel in the big fish. It's a powerful combo. So we know the how, now for the wow. Let's take a look at the scoreboard because honestly, the numbers behind Grow's rise are just breathtaking. This isn't just growth, it's hypergrowth. Just look at this chart. It's a classic hockey stick. Back in fiscal year 2021, Groww had just over 1 million active users. Fast forward to 2025, and that number exploded to almost 14 million. And it hasn't stopped. The latest numbers show they now have over 21 million transacting users. This isn't just steady progress, folks. It's a meteoric rise. But getting users to sign up is only half the story, right? The real question is, are they actually trusting the platform with their money? And the data says, oh yeah, absolutely. Total assets on the platform went from around 77 billion rupees to over 2.1 trillion in that same 4-year window. That's a critical number. It shows people aren't just signing up, they're committing serious capital. And you know what happens when you have explosive user growth and soaring assets? The financials go ballistic. Revenue more than tripled between 2023 and 2025. But look at the acceleration. In just the last quarter of fiscal year 26, they pulled in over 1,500 crore in revenue and made a quarterly profit of 686 crore. The engine is just firing on all cylinders. So how are they doing all this without just burning through mountains of cash on ads? Well, this right here is their secret weapon. Over 80% of their customers come to them organically. We're talking word of mouth, referrals from friends. This keeps their cost to acquire a new customer incredibly low, giving them this massive sustainable advantage that goes straight to their bottom line. Okay, so the story so far has been one of just incredible, off-the-charts success. But as any investor knows, what happened yesterday doesn't guarantee what's going to happen tomorrow. So now let's turn our attention to the future. What's the competition look like? What are the big opportunities? And what are the very real risks that are waiting for Groww down the road? And this really is the multi-billion-dollar question, isn't it? The one every single investor is asking. After a climb this fast, can this incredible growth possibly continue? Keeping this momentum is going to be the ultimate test, and there are definitely some big hurdles in the way. First off, they're not alone in this playground. The competition is fierce. I mean, look, while Groww has a really nice lead right now, companies like Zerodha and Angel One are huge, powerful players. The Indian brokerage space is a battlefield, and you can bet that market share is something they're fighting for every single day. There's no room to get comfortable. So if we look inside the company, Groww has some obvious strengths: a fantastic digital product, a super lean, low-cost model, and people tend to stick around. But there are weaknesses you got to consider. They don't really offer the deep personal advice you'd get from a traditional broker, and their heavy reliance on trading fees means they're vulnerable. If the market gets choppy and everyday investors pull back on trading, that's going to hit Grow's revenue directly. Now, looking outside, the single biggest opportunity is just the Indian market itself. It's still so underpenetrated. There are millions and millions more people who could become investors. And of course, moving into new areas like wealth management and lending could open up whole new, maybe even more stable ways to make money. But the risks are just as big. That intense competition we talked about, the constant threat of new government regulations changing the rules, and of course, the ever-present danger of cyber threats. But even with all those risks, the long-term view from a lot of analysts is still really positive. This quote here from a Motilal Oswal report pretty much sums it up perfectly. The core idea is that Groww is the right company with the right product in the right market at exactly the right time. And that brings us to this final critical question. Grow's whole strategy now is to go beyond just being a broker and build a complete all-in-one financial services company. So is this the move that makes them an unbeatable giant for decades? Or is there a risk that they're losing the laser focus that made them number one in the first place and maybe stretching themselves too thin? The answer to that question is what's going to define the next chapter of this incredible story.